Dump this now. I'm your host, Steve Metre, and thanks for joining me today. In our show today, this asset class is about to come crashing down, and I want to show you what it is, why you need to get it out of your portfolio immediately, and even better, how to take advantage of its decline. And that's why every Sunday we like to look at the technicals, momentum, and machine positioning to help you be a better trader and investor. Plus, we have a sponsor for today's show. Now, you may have noticed some of our recent sponsors, their stock price has just taken off, and one that we think is on the cusp of that is Spectaire Holdings. You can find them on the NASDAQ under the symbol SPEC. I'm going to show you this beautiful chart setup that they're seeing in big purchases in a supply zone. The stock's about to take off for a 30% move with a potential upwards of 52%. Stay tuned to find out how that's going to look, or check out the pinned comment or description for more information. Now let's head over to Goldman. I want to start out with the machine positioning. Then we're going to get into this asset class and see where the opportunities lie, because I've got a bunch of them in today's show for you. And here we can see equity positioning key levels from Goldman. We're focused on the CTAs and, of course, stock buybacks. We talked about how that blackout window was going to start closing on Monday. We've seen some of it. We're seeing even more now going to blackout, starting with the market open this Monday. And we're going to continue to see that all the way through about mid-January. So as you start to see corporates back out and machines start to stop buying, that tells you who's left, and mostly it's retail. As we look at the CTAs over the next week in a flat tape, that means stocks just really don't move. They're $18 billion to buy, so it's what's telling us is the CTAs are largely capped out here, with a little bit of selling on the S&P 500 in an up tape over $20 billion to buy. So again, you're seeing momentum kind of stretched on the machines, and even in a down tape, $5 billion of global equities to sell. In all cases, you're seeing some trimming in the S&P 500, but it's not a big deal. Now, over the next month, note in a flat tape, you see $30 billion to buy, which means most of the buying is front loaded into this week. In an up tape, $44 billion. So again, you're seeing, most of the buying front loaded. Down tape, a big $213 billion, which says that if we don't see the market materially move higher here toward the end of a month from now, the machines are going to start locking in those gains and move into a sell position. And as an investor, as a trader, following what the machines are doing is critical. So not only can we learn a lot from them and how they position themselves, but you want to make sure on the right side of their trade. So let's take a look now further in the global CTA position. You can see global equities. There is room to buy, but it is at a level where it needs, the machines want to see someone else take the market higher, and they're going to play chase as they normally do. As we look at U.S. equity positioning, again, not at max high levels, but they're fairly high up there. And all this tells us is any buying from machines going forward is going to be incremental. And that's why we've been talking about this blackout window, because the corporates were the big buyer. Now they're going away. They're cutting back their purchasing, leaving who's left? Potentially mutual funds who are just making some window dressing moves and changing positions, or up to retail. And we know retail investors like to buy the most at the top of markets. And sure enough, this time they're doing that. As we look at the buyback desk here again from Goldman, they estimate 15% of the S&P are in blackout. That was last week, with 30% being in the blackout at the end of the week. That again starts on Monday, so keep that in mind as we may see a change in momentum here. Now let's talk about the dollar, because this show is all about the dollar, and that is the one asset class that if it's in your portfolio, you need to get rid of it. But the good news is there are so many opportunities that are going to be created from a weaker dollar. It's going to be outright impressive. And we set this case up through the weekly show. What we're making this case for is that as Fed cuts rates, everybody thinks the dollar is going down, so they start trading accordingly. The good news is There's just so many opportunities, as you're about to see. But let's take a look at the dollar. Here we have UUP. This is the Invesco US Dollar Bullish ETF. Momentum on it is negative. The RSI is down at 42. MACD's got a negative cross. Momentum Timer Pro. Now, this is our report that takes all of those technical signals, like the MACD, the RSI, the stocks, all those other ones, and smooths them out, because many of you say, gosh, they're so confusing, I don't know which ones to do. We smooth them all out. Here we see 2 daily consecutive sell signals on that. And we have no position in the dollar bullish, but we did in UDN, the dollar bearish. That was a buy and open on 11.6. Again, back in early November. That trades up 2.9%. And if you're following that one, we're saying, hey, move your stop loss up. Hold on to some of that gain at 18.8 on that on UDN. Upside target remains the 21-day moving average. Downside, the 200-day. You'll note that we see across the board. Well, here we see Invesco, US dollar bullish. This is our machine positioning. What happened? It came off of a short position. So we mimicked that with our CTA Timer Pro, but we knew it wasn't going to last. The Fed validated that. Look for the CTA positioning to flip. Watch our reports lead the market to the downside in terms of where the machines are headed. But let's look at the chart here, because this is what's critical. You're seeing what's potentially a double top in the dollar. Now, what I want to point out is where the big levels of support are. The first one's going to be down here in the $27 range. If you're looking at broad levels of support, this is where you're looking to next. Currently trading at 29. There's a nice big down move. If those buyers don't hold, or the Fed, perhaps in the months to come, appears even more dovish, your major support is down below 27. You go back through history, you can see prior areas of resistance now become areas of support. That's around the 200 weekly moving average. Now let's zoom into the 5-year chart here. You can see the beautiful setup. There it is at 27.67 is your first major line of support. That's what we're looking for in the dollar, and that's going to be a huge catalyst to a lot of other sectors. And the simple reason why is when the currency that people hold loses value, they look to protect its value by putting it somewhere else. Now, around the world, a lot of people go into dollars, but if you're holding dollars, well, you look at equities, you look at bonds, you look at commodities, and you're about to see a ton of opportunity all over this market. Let's start out with the S&P 500 here as we look at our positioning on this. Momentum is positive on this. Our relative strength index, that's at 73. This thing is overbought and ripe for a reversal. The MACD's got a positive cross. How about this? Momentum Timer Pro, 31 consecutive daily buy signals. Now, the value of this report, and there are links in the description below for both of them. I'll put up 3 coupon codes for a free month. Some people keep saying, Steve, I go there and the coupon code's not there. It's because 3 people beat you to it. You got to be quick on these things. But what we note is we look at a 1-month window, a 3-month window, and a 6-month window, and we see that these are at extreme levels. It doesn't mean the market can't go higher. It just means it's time to start getting ready for a reversal. That's why we've raised our stop loss level. Remember, we have a buy and open on November 3rd. That trade up 8.4%. Friday's closing at 469. Upside target, this is a recent highs. We think it can get there if retail continues to buy. But normally, our machine positioning led the market. We told you where to go before everyone got there. Simple reason why is we run an historical overlay. This is something the machines do not do. Gives you a huge advantage to know where they're going before they get there. Now, let's take a look at this in perspective of the dollar. And now in purple here, we have UUP. This is, again, the dollar bullish fund. And I want you to see when the dollar comes down, it generally acts as a tailwind for U.S. equities. Here you can see dollar going down, and what happens? Equity prices go up. The catalyst for driving equity prices higher right now is likely the weaker dollar, because many people look at that and say that is going to drive exports. Now, it doesn't always work, because if the global economy heads into recession, obviously there's not going to be a lot of exports. But keep in mind, in the short term, this can be a wonderful move higher. Again, that's why we suggest tightening up the stop levels. And now we see a potential thrust to all-time highs is the next major move. As we zoom in here, we'll go to the 2-year chart. What do we know? That the MACD, the RSI, these are both at overbought territory. The only question left now is how far Do investors want to take this trade before it goes the other direction? Now, something we think is headed way up, that is the sponsor for today's show, Spectaire Holdings. Now, again, you can find them on the NASDAQ under the symbol SPEC. Just with all the other companies we feature on the show, you can find their information in the pinned comment or description. But let's take a look at this chart setup, because that's what we do on Sundays. We look for opportunities. Here you can see deep in the supply zone. We've been talking about Spectaire. They've been on the show for a matter of weeks. We've been pointing out, look at this beautiful supply zone. The first move up to the 200-day moving average, there's your case for a 30% move. See the volume profile line at 245? This is where most of the trades are at. That's your secondary move. That's a potential 52% higher from the current price. Now keep in mind, a lot of stocks we featured on the show have taken off in a big way. Don't think you want to miss out on this one. Here you can see again, look at the volume profile now. Zooming in to the 30-day chart, you can see the buyers all deep under here. The last time this happened, it took off up to $2.40. Do the math on that. This thing is ripe for a big takeoff, as is. We're still looking at the QQQs here and sitting again near all-time highs. When this happens, again, you want to start locking things in. Look for opportunities elsewhere. That's what some of the most successful traders do. They make money, they take their gains, and then they go somewhere else. They don't fight for every penny, but this one may have some legs up until those blackouts kick in. Here you can see the RSI is indeed overbought at 76. MACD's got a positive cross. 31 consecutive daily buy signals on Momentum Time Pro. And again, you look at the 1 month, the 3 month, the 6 month momentum. It's at very high levels. Yes, can go higher, but it may not. That's why we say raise your stop loss level up. If you're following our trades on October 9th, we have a buy and open. That trade's up a beautiful 11.9%. And again, and how did we do it? We used our machine positioning. Remember, this was at max short, and we saw these sell signals on Momentum Time Pro. We waited for them to flip. That triggered the buy, and you can do that too. Jump into the description below. Grab one of those reports. If you can get the first 30 days for free and you can get some positive trades, you'll see why so many of our subscribers say, Steve, your reports pay for themselves, and that would be wonderful for you. How about this? Upside target 408, downside 383. Let's take a look at QQQ here. Again, same case for the dollar. You see the dollar's going down. Does put some of a tailwind behind equity prices, and we think the dollar is indeed helping drive the NASDAQ higher. Let's zoom out here to the 5-year chart. This thing's more likely to make an all-time high here than anything else. This would be the first one. Again, we see the dollar making a pretty strong move down, and that, again, will be a likely tailwind, at least until the economic data catches up to it. So our upside target is the all-time high. The downside target, 383. Let's move that in here. You can see that just right below, down here in support. You see there's some recent support here. That's what we're targeting as a downside move. I have a hunch that investors are likely to take this higher, as they normally do. But another equity market worth looking at, if you're trying to find, one thing we do encourage is bottom fishing, because that's how to best use our reports. That's what traders look. You don't chase things that are high and already stretched on their valuation, but too many people do. But look at this. Let's talk about using the news and then our reports as Wall Street's China stock bulls seek redemption. After a humbling year, this came out today. Reality bid hard while U.S., Japanese, and Indian stocks rallied this year. Those in China have languished to make it the world's worst performing major market. Equities onshore poised to see a record 5th straight month of foreign outflows. So I get excited when I hear opportunity like that knocking. Says, wait a minute, this is the worst performing market. At some point, it's likely to turn around, and here you can see again exactly how to use our reports to make a ton of money. That's why we help you here. We appreciate you being a fan. We appreciate those who are subscribers, and we'd love to have you on our subscriber list too. Look at this, FXI. This is a China large cap ETF. Momentum is negative. The RSI is down there at 39. You're talking near oversold territory. MACD's got a negative cross, so it's validating what you're seeing in the news. How about this? 14 consecutive daily sell signals on Momentum Time Pro. We have the 1 month window in a deep sell, as is the 3 month window. The 6 month window looks to be coming down some more. So everything from a technical basis is saying, look, this thing's down. How about our machine positioning? This is what we coach our subscribers to look for, is this minus 100, because we do a historical overlay. So you see this and you say, hey, historically, this is an abnormality. That's where opportunity knocks, is a flip on both of those. Let's continue here because that's what we're waiting for. CTA to turn higher and Momentum Time Pro to show one daily buy count. And here, upside target 25.44, downside target the recent lows. Let's check out FXI. You want to talk about opportunity of a weaker dollar? Well, this is it. Let's zoom out here. And this is, again, one of many. You can see when it gets down deep in these levels and you see the dollar come crumbling down. Look at this thing take off down from the lows of around 21 all the way up to about 34. So this could be a superstar getting ready to take off, and we give you all the tools to trade it without taking as much risk as most people will. And here you can see the dollar coming down, starting to put some tailwind behind Chinese equities. There we zoom in. Look at that volume profile of the last 6 months is 2638. There is your bigger upside target from the current level. Again, wait for the confirming signals, but look at this coming off overbought territory on the RSI. MACD coming deep overbought, looking to make a positive cross. Everything lining up to put a beautiful signal in here. Let's continue. Want to talk about bonds because bonds love a weaker dollar too. Here from Nomura, we see on the 10-year over 114.58 to buy. They've been covering their shorts. Friday's close at 112.52. How about TLT? Momentum's positive. RSI is now in overbought territory. MACD's got a positive cross. We got 32 consecutive daily buy signals. And when we took on these trades and showed you what happens when you don't use a stop loss, everyone said we get clobbered. We're up 3.1%. We showed you how to use the reports to dollar cost average your positions. And sure enough, back in the black. Many of you said that would never happen. Some of you say it's still not going to happen. Well, there it is. Upside target 102.49. We hit our target at the 200-day moving average. Downside target 93.42. Notably, our CTA position is saying, look, the machine's got to do a lot of buying here. And sure enough, they're likely to, making this, maybe like China, one of the easiest trades you could have picked up on instead of chasing U.S. equities all at the top. Let's zoom out here. What do we see? Indeed, weaker dollar being a catalyst for bond prices. Why is that, you ask? Simple. It's not, you think, wait a minute, the rate on it's coming down. It's the duration that goes up. People want out of those dollars. They go into something that appreciates in value. That indeed is Treasuries. We're looking at a move to 102.49. I think we're going to make a bigger move up here right to this horizontal green line at 108.64. And if a breakout there, well, sky is the limit. So that means we're headed into a global recession and perhaps a financial crisis as well. Let's continue on and look at some other positions. We've got gold. Momentum's positive. RSI is 54. MACD's got a negative cross, but look at this, 3 consecutive daily buy signals. The problem here, look at momentum is stretched. Well, the 1 month, 3 month, and 6 month, this thing's pretty high. Now, some people want to chase gold higher, but here's the deal. Let's look at a chart. And one of the things I wanted to show you is there's other opportunities out there in the market. Now, we do know that a weaker dollar is absolutely a great catalyst for the metals and generally sends them higher. The problem is it's already sitting at a quad top. So this is fairly risky in terms of upside potential. Why I wanted to show you the bond market, why I wanted to show you the Chinese equity market, and let's look at some other positions here. What do we see? Gold miners, same story. We've got no position on this, but look, our machine positioning shows this thing's already to the long side. Maybe there's more, but on our Momentum Timer Pro, what happens? 1 month symbol maxed out, 3 months, 6 months, almost at max positions. Go find something that isn't already stretched from a momentum perspective. Here we zoom in. Yes, could this be a big tailwind for GDX? It absolutely could, and that would take GDX. We're looking at potential in the $36 price range. For me, I would look for something else, but use the reports wisely and hopefully use your stop losses. We always encourage you to do that. Let's continue on because I think we've got silver coming up as well. Here we can see momentum is negative. RSI is at 51. Now, if there's one of these three you were going to want to trade, maybe this would be the one. Or I got another setup for you. I told you at the beginning of the show, we got a bunch of them. How about this? MACD's got a negative cross. 1 consecutive daily sell signal on Momentum Timer Pro. Friday's closing 21.83. We're looking at an upside target of 22.45. How do we trade this? We have short position on CTA. Wait for a flip on that. Notice on the long side, they're buying back. Look for a flip on Momentum Timer Pro if you're going to trade this. and let that be your guide to send you higher. Let's take a look at the chart of silver. Again, I prefer, if I'm going to do this, to look for things that are already beaten up a bunch. Here you can see silver does benefit just like gold, just like the gold miners, but this one has potentially more upside opportunity with a little bit less risk. There you see the volume profile at the 2-year mark acting as support. Catalyst would be up here into that $23.60 price range on SLV. So keep an eye on that. If there was one above the 3, I would trade. Or take a look at this one. How about Invesco DB Agriculture, symbol DBA, our size at 51. MACD's got a negative cross, but look at this. One consecutive daily buy signal on Momentum Time Pro. Our CTA is buying up from a very low position that's been buying up from various low positions here. But this, we're putting this on the report. Buy it open Monday morning, 12:18. Said your stop loss 21.54. Friday's closing 21.96. Let's look at a better chart setup in terms of, when you're looking for opportunities, downside risk becomes one of your key factors. But look at this. DBA Agriculture takes off in a big way. You see a weaker dollar. This thing just goes ballistic. Here, the dollar's coming down, and this thing's looking to break out. So what we see here is a series of higher lows. Get that right. So here you see stepping up in a nice pattern. It's sitting right here at the 2-year volume profile. Break out of that. You got a 1, 2, 3 triple top. Break out of that. Now you've got a catalyst as we zoom out even further. Well, let's see, to perhaps send agriculture shares way up, maybe even break out to new all-time highs on a weaker dollar. This, to me, my friends, looks like a much lower risk setup than one of those we looked at before. So again, opportunities knocking all over the board for you here on the back of a weaker dollar. So keep in mind, check that out, and be sure to check out our sponsor for today's show. That is Spectaire Holdings on the NASDAQ under symbol SPEC. And as with all sponsors, you're under no obligation to purchase their stock. Be sure to do your research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.